we should analyze in the chart. All right, good. Now please let me know you are following us. Drop a comment in the comment section. All right, drop a comment in the comment section. All right, thank you very much for joining. So today we'll be looking at technical analysis using price action. And yeah, now so one important thing I want us to note, and this is a disclaimer, that any opinion, news, research, prices, analysis, or information discussed in this webinar or in this presentation is provided as a general market commentary, all right, and does not constitute any investment or financial advice. Yeah, so a little about me. I have a 7 years trading experience, in finance and in quantitative research. My trading results have been consistent, profitable across various strategies. I frequently trade price action momentum, trade and candlestick, primarily focusing on Euro USD, GBP USD, and USD JPY. All right, so now what are we going to be talking about today? We're going to be discussing top-down strategy, okay, and then I look to reviewing 3 currencies, but I'll be starting with Euro USD. All right, and then we'll also look at the price movement of Euro USD, and then we'll review any currencies suggested by the audience. All right, good. So and then we go to Q&A. Now, so this session is to last for 45 minutes, and then, all right. So, what does this strategy consist of? One of the important things we should know is that this strategy would help us to analyze historical price movement, also utilize candlestick formation, chart patterns, and market structure. Now, what kind of trader is it suitable for? One is suitable for position trader, intraday trader, and swing trader. Now, when should you use it? Of course, you can use this strategy during a high liquidity period, and also you can use it within time frames from an 1 hour time frame to 1 month time frame. So let's get to our trade. Good. So here we are. I'm starting out with Euro USD. If you have any currency in mind you want us to analyze, please do well, to drop it in the comment section, and I would look into it as time goes by. So the first thing we are looking at here is Euro USD, and there are the few things I look at when analyzing the market. So let's go down to the first thing first. I go down to the 1 hour time frame. Okay. Now, because most importantly, I want to understand what the market structure has been on the 1 hour time frame. All right. So here on the 1 hour time frame, we can see that there are several structures we need to look at. Market structure here. Okay. Levels of support and resistance. Also here we have a major level of support and resistance. Right now one important thing I wanted to note is that to see these clear spots, all right, you can just change your candlestick chart to a line chart. All right, good. So changing your candlestick chart to a line chart helps you to because the line chart just looks at the closing price of every candlestick. So here, we've been able to map out this level. All right, and here we've been able to map out this level. Of course, there are some minor support and resistance zones, here, all right, so of which would be some of the factors we'll look at as we go by. So let's go back to the candlestick. Okay, interesting. Now, looking at how price has moved thus far, okay, we can see clearly here that price is ranging, okay, it's ranging between this box, all right, it's ranging here. Let me move this here so we can see. Let me get this. Okay, so let's look at this. All right, now when we look at this now, we can see that price is ranging within this box here. All right, now there are two things that can change the market direction on this monthly time frame. Like on this monthly time frame now, there are two things that can change the broader market direction. Okay, now because when you look at the general market direction, we can equally see that Euro USD has been experiencing some higher low, higher low, higher low, higher low, higher low, and you know what that means? That has been giving a lot of drop in price. All right, so now there are two things that can happen here that might just change the entire market direction for Euro USD, and that is Euro USD having to experience a breakout from this zone. All right, if Euro USD breaks out of this zone, that's like a change in trajectory for Euro USD. So when we see Euro USD maybe break out of this zone, rallies a bit, then it's all the way up, all right, all the way up to this next resistance zone, and probably drop a bit before picking back up. All right, now this is an overall market chart now, because it's on the 1 hour monthly time frame, right? On the other end, if Euro USD price are dropped below this level, all right, below this level here, so we might just be seeing more of a drop. Okay, might just be seeing more of a drop here. All right, yeah. So let's go down to the monthly, the weekly time frame. So we are doing a top-down approach, like we've said. So let's go down to a weekly time frame. Now, equally, you can see that price has been, like I said, moving within this box. All right, and if you look at price movements, when it started from here, let me move this. Okay, good. So when it started from here up to this level, then down, up, then down, okay, then up, down, up, down, up, down, now ranging just within this box. Okay, now price has gone up. All right, now looking at the previous price movement, okay, there is a higher likelihood, all right, that price will drop. Okay, if not further down, possibly drop to a level here, all right, before picking back up. But here is something I want you to see, because this will also guide your knowledge when making your trade. Now let's look closely at this. So I want to spot major touch points of price. So there's a touch point here, all right, then there's another touch point here, okay, then there's another touch point here, okay, now then there's another touch point here, all right. Now, and at every touch point we have here, we experience a pullback. We experience a pullback. Now, when you look at this now, there's a touch point here. Okay, another touch point here. Okay, we had not much of a touch point, but let's just say a touch point at this level. Okay, now if you are watching out this trajectory now and understanding this price movement as it moves in wave-like pattern within this this box. Okay, we call it, this is a consolidating market. So on the weekly time frame, we can see it consolidating. All right, now it has come to touch this level now, and when we look at the previous week, okay, the previous week, what was the candlestick from the previous week? We can see that the candlestick from the previous week shows that there is a lot pressure coming from below, right? There is more pressure coming from below on last week candle, all right, because we are seeing a sell pressure and a long wick to the upside, okay, showing that there is so much sell pressure coming in. All right, now when we now look at what is currently happening, we can also see that sell pressure already coming in. Okay, most interestingly, when market data has been released, the US retail sales was released today, which came out higher than the actual. All right, however, more reason why we have the price pulling back more is because the employment jobless claim turns out to be lower. Okay, and that means that when the actual data is lower than the forecasted data on the jobless claim, shows that the number of people who claim to be jobless dropped. All right, so if we are saying, okay, we are expecting that, given the economic situation, we are expecting that 100 persons will be jobless, all right, this month, and it turns out that only 50 persons are jobless. Now that is positive, because now our actual forecast on the jobless claim, okay, on the unemployment claim, is lower than the actual value is lower than the forecasted value on jobless claim. Shows that more people now have jobs. Okay, now more people having jobs means more people were paid. All right, so which means that if more people had jobs, now they are now earning money. Okay, shows that they have more to spend, more to consume. So now the jobless claim reducing and the retail sales data increasing shows that there is an improvement in the economy, where people now have jobs, more people now have jobs and spend and consume. So when the data came out today, all right, it created this pullback that we are seeing here. Okay, this pushback that we are seeing here, was influenced by the news. So let's go down to the daily time frame. Now we can see what the daily time frame is showing us here, because this becomes more interesting when we look deeper, as we dig deeper. Now, having established the fact that prices have been consolidating within this range, all right, having established that fact, then we now also spotted out levels where price got to, touch points where price got to and turned around. All right, And now we can see that price got to that same touch point, okay, up here, and already giving a sell signal. So when we look at this here, we can see clearly here that this level here is a resistance zone, one. Now the candlestick that closed yesterday, all right, is a bearish hammer, okay. Now, and we can see that the momentum coming in thereafter is also bearish. Now, what are the confluence that we are looking at here? For long-term traders, all right, your target can then be holding on. Sorry, let me delete this. Okay, good. Holding on to price to drop further. Your target level can either be this support zone or this support zone. All right. So, but however, this would be a long ride. All right, a long ride. Should I say a long ride to freedom? So yeah, this would be an interesting ride. Okay, for day trader, position trader, and swing traders. Okay, good. So, but we've established that we can see that price is sitting pretty much at a resistance zone, with the previous candle as showing the rejection and also a bearish hammer. Okay, now when we go down to the 4 hours time frame, okay, I can see Adekunle said thank you for your explanation on today's data. You're welcome. Yeah, this data influences the markets very well. So now we can see that going closer now, we can see the impact of this data. All right, so like I said, maybe for those who are just joining, the data that came out today shows that tracks information of consumers. All right, how much people actually spend, how people actually spend. So yeah, so now this data shows that more people actually spend. And previously, all right, we had a data on unemployment claims, and people claim less number of persons claimed that they were jobless. All right, so the data that was expected to be was expected to be for jobless claims, okay, was actually higher than the actual value. So the real value shows that less people were actually jobless, and plus today's news that says more persons actually spent. Okay, so that shows that the US economy is good, strong. All right, that passes out a sentiment into the market, which created a positive move for the USD. All right, and that's why you see that the USD actually pulled back from this level. All right, good. So now looking at this, okay, of course, now when we now look at this is the 4 hours time frame. All right, on the 4 hours time frame, you can see this bearish hammer here. All right, when this bearish hammer showed up, prior to the bearish hammer showing up, okay, good, prior to the bearish hammer showing up, we can see that at this level here we had an indecision. An indecision at a resistance zone shows that there is the higher chances of a turnaround in market direction. Okay, and we can see markets turning around at this level. All right, after this showed up, then the news also speed up the process, and we saw the market drop further. All right, of course, when we have a news outbreak like this, there is always 60 to 50% reversal, okay, pullback. So that's what we can see here, where price has pulled back a bit up until this level. But interestingly, we are coming from a higher time frame. So on a higher time frame, we already see that there is the yesterday gave us, a serious bearish signal, showing that what there is sell pressure at this level. All right, and today as well, having half of the body field, bearish, okay, is also one of those things that we can look at, one of those factors, all right, that can signal a sell to us as a retail trader. So now when we go down to the 4 hours time frame, we now see what is currently going on in, okay, or what I'm going to do is actually to sell. All right. However, of course, I placed a sell today. I've closed my trade because I knew that this reversal would come in. All right. And then what I'm doing next, okay, is this. I'm putting a sell order at this level. Okay. I'm putting a sell order at this level. All right. That is the level 1.09571. All right, so when price comes to this level, my sell order is triggered. Okay, my sell order is triggered, of course, and then I can watch, price fall further. All right. However, I would also have my stop loss at the next resistance zone. So I do more of intraday trading. All right. And then I would put my stop loss, okay, at the next resistance zone, which is this level, okay, and then my take profit, can be targeted towards the first level take profit, and then second level take profit. All right, so this is what I'm going to be doing on Euro USD. Okay, yes, so now let's go down to the 1 hour time frame. Good. So looking closely to the 1 hour time frame here, we can see that there was just a pullback, all right, at this level, and we can see price is already pushing back downwards. Okay, so for those who can't wait to set their sell order here and you want to sell from this level, all right, so it's another opportunity for you. Okay, so you can see price go up here, now it would come down and then finally go down. All right, so either of the two, Euro USD is selling off from this level. All right, either of the two, Euro USD is selling off from this level. Okay, I'm sure you are getting value. If you are getting value, please let me know in the comment section. If you got value from this session, if you are getting value from this session, let me know in the comment section. And if you are new on this platform, please do well to tap on your subscription button and smash the notification bell to be the first to be notified whenever we are having future webinars. All right. So I want to get a currency suggested by the audience that I'm going to analyze for us. So if there is any currency of interest to you, you can always drop it. I'm going to pick and then we go ahead. Okay, I see someone already dropped BTC USD. All right, if another person chose that I analyze BTC USD, I'm going to analyze it. All right, so I'm waiting. Drop your currency that you want me to trade. Okay, so if I have another person telling me to analyze BTC, I will do that. Okay, yeah, who is dropping first? We don't have much time. Okay, Olatunde said GBP USD. All right, I need one more person or two, Okay, wow, I have 3 persons going for B. Right, so let's have it. Okay. Okay, so now here is BTC. Okay, and we'll start from the monthly time frame. Okay, so we'll start on the monthly time frame. So, okay, let me just take off this. Now, for BTC now, let's map out levels of support and resistance. Okay, so we're going to do here levels of support and resistance. Here likewise, levels of support and resistance. Here likewise, there's a level of support and resistance. So, if you look closely at the movement of BTC started, let's just start the journey from 2019. It went up, okay? It went as high as 60k in 2021, came down, okay, to 30k in that same 2021, went up again, same 2021 October, went further down, okay, in 2022 November, picked up and went as high as 70 in 2024, March. All right, and after which a lot of retracement greeted BTC, and then we can see it retrace further down to the 49k region. All right, and of course we can see the pushback that has happened on it and is currently sitting on the 58k region. Now, when we look at this now, of course, let's just map, let's just tag this place as level where BTC has gotten to, and was pushed back. As we can see clearly, BTC got here and has pushed back. Okay, good. Now, let's go down to the weekly time frame. Now, something interesting, okay, happened, today. So we can see that last week BTC actually fought for its stability within the 49k level and the 57k level, and you can see that it was a tough battle. We can see so much of a pushback up. All right, and of course for BTC to have gone farther down as 49, that says a lot. All right, that says a lot. So now there was a pushback because of course there is a buy pressure from this place. This level is seen as a demand zone, okay, pushing BTC back up. But of course BTC had previously broken through a major support zone. BTC's major support zone is the 60k region. All right, now we can see that BTC has broken through its major support zone. So now that support zone that BTC broke through now is now acting as a resistance zone. Okay, that support zone that BTC broke through here is now acting as a what? A resistance zone. And that is why BTC has been finding it quite difficult, okay, to break through this resistance zone and keep moving and go and just go on its normal journey, as everyone would love to see it at 70, at 100 and the likes. All right, so now but what we can see here is BTC consolidating, and then ranging at this level, because these pullbacks, these weeks and all, when we look at it on lower time frame, you will see it in form of consolidations, wave-like patterns and all. So here is where BTC is now, and is at a resistance zone, a support turned resistance zone. Okay, now let's go down to the daily time frame. Now, when we look at BTC from the daily time frame, okay, like I said, you can see, BTC was having more like a downward sloping movement, okay, a higher low, higher low, higher low, higher low. All right, so okay, good. So we can see here now how BTC had moved. Let me get this brush. All right, so see, we moved, BTC moved up, came down, moved up, came down, okay, moved up, came down, moved up, came down, okay, good. So now, where next do you expect BTC to go? Of course, up, right? To continue the what is it called? The trend, okay? The trend, the channel in which it is currently moving, in a higher low pattern. All right. So we're anticipating that, okay, BTC would go up here. However, there is a serious level, which is this support zone here, that BTC have to break through. And when I mean breakthrough, it has to break finally out of it. Okay? Finally out of it. So, and it is this level. Alright, this is the level that BTC needs to break out from in order for us to achieve getting back to the 68k mark. Alright, and when it gets to the 68k mark, it depends. If it breaks out of this channel, then we can see the 70k. Alright, however, before we get to this level, BTC has to finally break out of this level. Okay, BTC has to break out of this level and close above this level. All right, so because if not, it's more like BTC just what happened to BTC is just a pullback here, a push back up, and a drop. Let me remove it. The chart is looking very clumsy. Okay, yeah, this is it. So we might just see that BTC drops here, goes up here, and we just drop back again. All right. If it doesn't break this resistance level, then what we are expecting to see on BTC is a further drop. All right, it's a further drop from this level downwards. Okay, so the benchmark would be here. All right, that's the 52k region. Okay, but you see, when we look closely now, we can already see that the possibility of a pullback of a continuous fall in price is higher. Is higher because when you look closely, look at how prices have been closing. All right, price has been closing lower than the other. All right, so today now, if price does not hold at 59 and moves down to 57, all right, we might just see a continuous drop in price to 58. Okay, from the market structure right now, okay, from the current market structure that I am seeing, all right, the likelihood of BTC dropping is more than the likelihood of it rising. All right, the likelihood of BTC dropping is more than the likelihood of BTC rising. All right, so or if you are looking at taking a swing on BTC, you might want to look at shorting BTC. All right, so let's go down to the 4 hours time frame. Okay, now see what we have here. This is the resistance level I'm talking about. So you see this and this, so we just do something like this. So now we have this range particularly. I just wanted to just so that we can equally see. Okay, so now this is the place. We can call this the decision box. Decision box in the sense that any breakout from either of the angles will lead to a major occurrence. All right, a breakout to the upside, we might see ourselves greeting the 69k region. Okay, a breakout to the downward side would see ourselves greeting the 52k region. All right, now the one that has the higher possibility of doing that now is the downward side. All right, the downward side now is having that possibility than the upward movement. Okay, so the likelihood of BTC dropping, I repeat, is higher than the likelihood of BTC rising. All right, good. So now let's go down to the 1 hour time frame. So for short-term traders, you might just see BTC would just move, up to maybe 60k. All right, but the likelihood that is going to break out of this level to the upside is low, and more the likelihood that BTC, and from the analysis I've done on Euro USD, please do well to ask. All right. Any question before we call it a day? Any question? Okay, so this would be the end of our analysis on BTC. So I want to share with you all right, so that marks the end of our session. Now, it's important that you understand where risk management comes in. Okay, now number one, you want to start with a demo account and practice with virtual money to understand the market, particularly when you pick interest in trading BTC. It's an highly volatile market, so you want to be sure that you have a strong hand and a good strategy to manage your real capital without risking it. All right, so we recommend that you start with a demo account. Number two, use your stop loss order. All right, the market is not your friend. Use your stop loss order. Number three, trade with risk to reward ratio. And most advisable, you can aim at a minimum of 1 to 2 risk to reward ratio, meaning you should aim to gain at least twice as much as you are risking. That is very, very important, and that's what we recommend. Now, number four, you are also to risk only small percentage on a single trade. Don't risk 100% on a single trade. All right, you have to risk small percentage on a single trade. Number five, diversify your trades. So avoid putting all your capital in a single trade or in a single currency. So instead of taking 0.5 lot size on a single currency, why don't you take 0.2 lot size or 0.1 lot size on 5 different currencies? All right, So also avoid over leveraging. Okay, in terms of minimize your leverage, manage your leverage in line with your risk appetite. All right. Number 7, stick to your trading plan. Stick to your trading plan. So have a trading plan: when to buy, when to sell, what to look out for, and that will really help you. All right. So keep up with the market news. Like today now, economic news, they turn the market around. So you have to also keep an eye out. Number 9, avoid over trading. Very important. Avoid over trading. And number 10, review and adjust your strategy regularly. All right. Now, before you go, please go to your app and get the Octa trading app. Is available on iOS and on Google Play Store, and we offer a wider range of trading instruments with low spread, fast execution, and zero commission. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, I have a promo code for you. I'm sure a lot of us have been waiting for that opportunity. All right. Now, here is an advantage for you to take action on. Number 1, open your trading app or visit our website. Go to your profile, find the promo code section, enter the promo code, and press activate. Make a bonus deposit and enjoy your bonus. The promo code is on the right side of the screen. Tunmise 100, TUNMISE 100, and thank you for joining. Don't forget to tap on the subscribe button and smash the notification bell to be the first, to be notified whenever we are having the forthcoming webinar. All right. Thank you for joining, and see you in our next session. Bye, guys.